All right, let's do this. Today, we are taking a deep dive into GE Aerospace's Q3 2024 earnings call.
We've got the earnings release filed with the SEC.
We even have the transcript of the actual call.
And it might sound dry, but trust me, there's a lot to unpack here.
Yeah, earnings calls, who needs them?
Right. Well, this one's got record demand, supply chain chaos.
And even a secret weapon called flight deck.
Yeah, helping GE Aerospace navigate through all that turbulence.
So this is actually their first earnings call as a standalone company.
Yeah, first one since they spun off from General Electric.
They're flying solo now.
Yeah, and the pressure's on to prove they can really soar on their own.
That's right. And they're not some small startup.
No, they're a global powerhouse.
They have a massive installed base.
Yeah, 44,000 commercial.
And 26,000 military aircraft engines in service.
Think about that for a second.
Wow.
They're powering a huge chunk of global aviation.
Yeah, it's a lot of responsibility.
Especially when you see how demand is just skyrocketing like it is now.
Yeah, okay, let's talk about that demand, because orders are up 28% this quarter.
Air travel is booming.
Departures are up.
And the LAP engine
Yeah.
is powering over 20% more narrow-body flights globally.
But there is a catch, right?
The supply chain.
It's like the elephant in the room.
For basically every industry right now.
Yeah.
And GE Aerospace is feeling the squeeze.
So they're struggling to get the components they need
Particularly for those LAP engines.
to meet this incredible demand.
It's like you're trying to bake a cake, but you can't find any eggs.
Yeah, except in this case, the missing ingredients are high-tech components, like HPT blades,
Those are high-pressure turbine blades.
crucial for the engine's performance.
No blades, no engines.
No engines, unhappy customers.
Exactly.
Okay, so that's where flight deck comes in.
Think of it as GE Aerospace's secret weapon.
Can navigate this crazy supply chain chaos.
It's their proprietary lean management system.
They're using it to optimize everything.
From their internal operations to their relationships with their suppliers.
So it's not just about streamlining their own processes.
They're working with their suppliers to find solutions.
Hand in hand.
Collaborating, identifying bottlenecks, streamlining workflows.
Squeezing out every little bit of extra production they can.
And it seems to be working.
Yeah.
They've actually increased material output
From where?
from key supplier sites by 18% in Q3 alone.
18%. That's a pretty impressive jump in this environment.
Yeah, flight deck, living up to its name.
It is. But let's get down to it. How did all of this affect their financials?
So despite all those supply chain headaches, they actually pulled off pretty strong earnings and cash flow.
Really?
Revenue's up 6%.
Okay.
Operating profit climbed 14%,
Wow.
and adjusted EPS soared by an impressive 25%.
So they're thriving. Even with all of these challenges, they're making money.
They are, but let's break down their performance a bit,
Okay.
starting with their commercial engines and services segment.
CES.
CES, yeah.
Okay, what's the story there?
So CES saw incredible order growth, up 29%. This was driven by strong demand for both their services and equipment.
Okay.
Their services revenue in particular is booming.
How much?
10% jump.
Wow, that's because of...
Increased spare parts sales, more complex shop visits, and price increases.
So the services business is a cash cow right now.
But what about equipment?
Yeah, that's where they must be getting hit the hardest, right?
You're right. Equipment revenue actually declined
Right.
4% because of those supply chain constraints.
That makes sense. If they can't build the engines, they can't deliver them.
Exactly.
Okay, so what about their other segment, the Defense and Propulsion Technologies, or DPT?
DPC also had impressive order growth that came in at 19%.
That's right.
However, they did see their profits take a bit of a dip.
Why is that?
A mix of factors, including inflation,
Okay.
an unfavorable engine mix, and, this is important, investments in those next-generation products.
They're still investing in the future, even with all these challenges.
Oh yeah, playing the long game. But there is another factor we need to consider, and that's the Boeing situation.
Ah, yes. Can't forget about that. What's the latest there?
So the Boeing strike and the delays to the 777X program are definitely having a ripple effect.
Yeah.
And GE Aerospace acknowledged these headwinds, particularly for their fourth quarter outlook.
So that's a curveball. But it seems like they're committed to working with Boeing through these times, right?
They emphasize their strong partnership and their commitment to supporting Boeing through all this.
It's a reminder that collaboration is key in this industry.
Absolutely. And speaking of looking ahead, based on their performance so far and their expectations for Q4, GE Aerospace actually raised their full-year guidance for 2024.
Oh, okay. This is where it gets interesting. What are they projecting?
Well, they're sticking with their initial revenue projections, but get this. They bumped up their operating profit expectations. They're now anticipating somewhere between $6.7 billion and $6.9 billion.
Wow.
That's a $150 million increase at the midpoint. And their adjusted EPS guidance is also up, now projected to be in the range of $4.20 to $4.35.
So they're basically saying, hey, things are tougher than we thought, but we're still killing it.
You could say that.
They're executing well.
But now the million-dollar question.
2025.
Yeah, what about 2025?
What kind of crystal ball gazing are they doing?
Well, they haven't given us specific numbers yet, but they did give us some hints.
Oh, I'm all ears.
Okay, well, they're particularly bullish on the continued strength of their commercial services.
Okay.
And they also see the potential for even faster equipment growth.
Driven by?
Driven by those LAP and 9X engine deliveries.
Okay.
And, of course, their robust backlog in DPT. They've got a lot of orders already lined up.
Yeah, so they're confident about the future, even with the headwinds.
That confidence is coming from their proactive approach to tackling these challenges, their strategic partnerships, and their commitment to investing in all that cutting-edge technology.
They're not just meeting demand.
They're shaping the future of flight.
Yeah, that's inspiring. But let's take a closer look at these supply chain issues, because how is Flight Deck really helping them navigate this complex landscape?
So one of the key bottlenecks they've identified is the production of those HPT blades.
The ones that are crucial for the LEAP engine.
Right. And they're working closely with their suppliers to try and increase output.
It's a delicate dance.
It is.
So it's not just about finding new suppliers.
Or stockpiling parts.
It's about optimizing the entire system, squeezing out efficiency.
Exactly. That's where Flight Deck comes in. It gives them the visibility and the tools they need to do just that.
Okay, but how does it actually work in practice? Can you give me an example?
Absolutely. Let's take a look at their MRO facility in Selma, Brazil.
Okay.
They used Flight Deck principles like value stream mapping and problem solving to tackle a major bottleneck.
Which was?
The LAP engine test cycle time.
Oh, testing is a crucial part.
Any delays there can have a ripple effect on the whole operation. But by meticulously analyzing the process and identifying areas for improvement, they were able to slash lead times
By
almost 50%.
Wow, 50%.
Yeah, a game changer.
So it's about working smarter, not harder.
Exactly. And this is just one example. They are applying these principles across the board.
Across the whole operation.
They're investing $1 billion over the next 5 years to expand their internal MRO capacity.
$1 billion.
They're adding those advanced inspection techniques and enhancing repair capabilities.
So that's a bold move considering the economic uncertainty.
It is.
It shows they're serious about boosting service capabilities.
But they're not stopping there. They're strategically expanding their third-party network.
What does that mean?
So they're giving their customers more options and ensuring a more competitive market.
So they're building an ecosystem.
Yeah, a network of partners all working together to keep those engines flying.
I like that. Give me an example.
Well, a great example is their recent partnership with Lufthansa Technik to set up a dedicated LEAP MRO shop in Poland.
Wow.
They'll be inducting their first engine there in Q4.
That's a big deal.
It is expanding their global reach.
Yeah, smart.
And they're collaborating closely with their existing third-party MROs.
How's that going?
Well, those MROs actually handled a record number of LEAP shop visits in Q3.
A record?
Yeah.
That's impressive. It really highlights the power of collaboration.
Absolutely. They're leveraging the strengths of their partners to create a more robust and responsive ecosystem.
So it sounds like a win-win for everybody.
It is.
GE Aerospace expands its service capacity.
Customers benefit from those faster turnaround times.
And the industry as a whole becomes more efficient.
Exactly.
But it's not just about meeting current demand, it's about building for the future.
You're right. And speaking of the future, they recently announced plans to conduct early dust ingestion tests.
What?
Yeah, on the open fan design, that's at the heart of their CFM RISE technology initiative.
Hold on. Dust ingestion tests. Why are those so important?
Well, these tests are usually done much later in the development process, but they're doing them early to try and incorporate key durability learnings from their existing engines that operate in really tough, high-temperature environments.
So they're learning from their current engines.
To make their future engines even better.
Smart move.
Exactly. Always looking for ways to improve and innovate.
Okay. But it's not just about commercial aviation, right?
That's right.
They're also making waves in defense technologies.
Yeah, their T901 engine's a great example.
Right.
It's going to be crucial for modernizing Black Hawk and Apache helicopters.
Wow, those are iconic military helicopters.
Essential for operations all over the world.
Yeah.
And the T901 engine is making steady progress towards its next milestone, power on and ground runs.
Okay, that's a big step.
And their digital backbone technology, which is going to be integrated into Bell's future long-range assault aircraft, actually played a key role in the U.S. Army's decision to move that program into the next phase of development.
So this digital backbone is a game changer.
It really is testament to their technological leadership.
And it's not just about developing new technologies.
It's about making progress with existing ones.
Like that.
XA-100 engine, yeah. The one that's designed to power those futuristic sixth-generation fighter jets.
Yeah.
Recently completed its 4th round of testing.
Wow. And they're also nearing completion of the detailed design for the U.S. Air Force's Next Generation Adaptive Propulsion Program, or NGAP. NGAP, what's that all about?
It's a revolutionary concept. They're developing engines that can switch between high-thrust and high-efficiency modes.
So basically a hybrid engine for a fighter jet.
It is incredible, right?
It's incredible. They're redefining what's possible.
It's this relentless pursuit of progress that really sets them apart.
But let's not forget about their commitment to sustainability.
That's a crucial part of their strategy.
Yeah, developing technologies and solutions to reduce aviation's environmental impact.
Some more fuel-efficient engines, alternative fuels, that kind of thing.
Exactly.
I'm not messing around.
So
sustainability is a must-have for the viability of the industry.
And it's that forward-thinking approach that makes them a leader.
It does.
But like any company, they face challenges.
A Boeing strike, those 777X delays,
But they're facing them head on.
collaboration and problem solving.
And they're not letting those challenges distract them from their long-term goals.
They're investing in R&D, expanding their service capabilities, building those strategic partnerships.
This resilience and adaptability will ultimately determine their success.
And based on their performance so far and that optimistic outlook for 2025, they seem to be on the right track.
It's an exciting time to be following GE Aerospace, but before we wrap up this deep dive, let's take a closer look at their financials and see how their various segments are contributing to their overall success.
Sounds good. Let's start with commercial engines and services, or CES.
CES is their largest segment, right?
It is, and it's performing exceptionally well.
How so?
In the 3rd quarter, CES revenue soared 8%.
Wow, what's fueling that growth?
Well, on the services side, it's a combination of things. A surge in spare parts sales, more complex shop visits, and those price increases.
They're benefiting from that increased demand for maintenance and repairs.
And their ability to command higher prices.
And it's not just about volume, it's the value of each service.
Exactly.
Because they're tackling those more challenging repairs.
It means higher revenue.
Makes sense. Their expertise and capabilities are allowing them to capture a greater share of that high-value MRO market.
And on the equipment side,
Yeah.
they're seeing steady growth driven by that customer mix and favorable pricing.
But they did experience that 4% decline in engine deliveries because of supply chain constraints.
That's right.
But despite that setback, they're managing to grow their equipment revenue.
Thanks to that favorable mix of engines sold
Right.
and their ability to negotiate better prices.
So they're strategically managing their product mix
And pricing.
to offset those delivery delays.
Exactly. That's what's helping them navigate this environment.
So what's the bottom line for CES?
Well, despite the headwinds, CES delivered a 16% increase in profit.
Okay.
And margins expanded an impressive 180 basis points.
So they're effectively managing costs and maximizing profitability.
They're not just growing revenue,
They're growing it profitably.
which is what matters to investors.
Exactly. Okay, now let's shift gears to their defense and propulsion technologies, or DPT.
Okay.
It's their smaller segment, but still significant.
It is. And it's also experiencing that strong demand.
How so?
Well, in Q3, DPT orders surged 19%.
Wow, and that's mainly due to
That robust demand from their defense and systems business.
they're seeing strong interest from military customers all over the world,
Exactly. And this is reflected in their backlog.
which is
Their DPT backlog is at $18 billion.
okay.
That's a $1 billion increase compared to last year.
That's a healthy backlog. It provides good visibility.
It does, but despite the strong orders, DPT's profitability was down in Q3.
Why is that?
A few things. They faced headwinds from inflation, an unfavorable engine mix, and those increased investments in next-generation products.
So they're getting squeezed by costs while also investing for the future.
Exactly. It's also worth noting that they incurred a non-cash impairment charge related to their Calibrium additive business.
Calibrium additive? What's that?
It's a business that specializes in additive manufacturing,
Or,
3D printing.
okay.
They use this technology to produce key components for the LEAP and 9X engines.
So it's strategically important.
It is.
Okay.
And while they did incur that impairment charge, they remain committed to Calibrium additive and its role in shaping the future.
So it's a short-term setback.
But they still see the long-term potential.
Okay, and despite the profit decline in Q3, DPT's year-to-date performance has been strong.
Yeah.
How so?
Their year-to-date revenue and profit are up 6% and 22% respectively.
Oh?
And margins expanded 150 basis points.
So they're still on track for solid full-year results.
They are.
For DPT.
Yes. And they're confident that those ongoing efforts to improve delivery and their investments in those next-generation technologies are going to drive continued growth and profitability.
So they're taking the long-term view.
Exactly.
Making the necessary investments to ensure their success.
Now let's move on to their corporate segment.
And this segment includes all their corporate-level expenses, right?
That's right. Things like executive salaries, administrative costs, other overhead expenses.
The cost of running the company.
Exactly. And since becoming an independent company, they've been laser-focused on streamlining their corporate operations.
Like how?
They've made significant progress in reducing their corporate costs.
By how much?
Well, their year-to-date corporate expenses are down about 25%,
Okay.
or $150 million,
Compared to...
same period last year.
That's substantial. Shows they're serious about controlling costs.
They're committed to running a lean organization.
And this cost discipline is reflected in their profitability.
Absolutely. Now let's look at their overall financial performance for Q3.
They had strong revenue and profit growth despite those supply chain headwinds.
Their total revenue for the quarter was up 6%,
Okay.
and their operating profit surged 14%.
And their adjusted EPS climbed 25%.
Exactly.
Wow, they generated $1.8 billion in free cash flow.
Yeah, with a conversion rate of over 140%.
So they were converting profits into cash effectively.
And supporting their shareholder return initiatives,
Which are?
they've returned over $4 billion to shareholders year to date
Wow.
through dividends and share buybacks.
So they're rewarding their shareholders and investing for growth.
It's a balanced approach.
And this is just the beginning for them as an independent company.
It is.
They're well positioned for continued success.
Thanks to that strong market position, their technological leadership, and that unwavering commitment to operational excellence.
I couldn't agree more. But before we wrap this up, let's take a moment to reflect on what makes GE Aerospace truly unique.
Okay.
What sets them apart?
A few things come to mind. First, their scale is unmatched.
They have that massive installed base.
Yeah, engines powering both commercial and military aircraft around the world.
That gives them a significant advantage.
In terms of market reach and customer relationships.
Exactly. And second,
Their technological expertise.
which is
Second to none.
they're constantly innovating.
Developing groundbreaking technologies that are shaping the future of flight.
We've seen that with their advancements in engine efficiency, durability, and digital capabilities.
And third, their commitment to safety and quality.
Yeah, their engines are critical to the safe operation of aircraft.
They take that responsibility very seriously.
It's that focus that's earned them trust.
And the respect of the industry.
And finally, their culture of operational excellence.
Deeply ingrained.
They're constantly striving to improve.
Reduce waste, deliver the highest level of customer satisfaction.
This operational focus allows them to navigate challenges and deliver those consistent results.
It's their secret sauce.
So GE Aerospace is a company with a rich history, a bright future, and a unique set of capabilities that position them for success.
They're a true leader.
And it'll be fascinating to see how they continue to evolve and shape the future of flight.
Absolutely.
But before we move on, I want to leave our listeners with a thought-provoking question to consider.
Hit me with it.
Given their track record, their spirit, their focus on excellence, just how high will GE Aerospace soar in the years to come?
That's a question worth pondering. They've already achieved so much, but it feels like they're just getting started.
Their journey is far from over. The possibilities are limitless.
It's exciting to follow.
It is. But for now, we've reached the end of part 1 of our deep dive into GE Aerospace's third quarter 2024 earnings. We'll be back soon with part 2, where we delve even deeper into their story.
Their financial performance really highlights their strategic approach.
Okay.
Take their services revenue as an example.
Yeah, you mentioned that services revenue was up 10%, which is impressive considering all the supply chain stuff they're dealing with.
It shows the power of their installed base.
Right, we're talking 44,000 commercial and 26,000 military engines out there.
A force of nature in the industry.
They are.
As those engines rack up flight hours, the need for maintenance, repairs, and overhauls, you know that MRO business.
Yeah.
It naturally increases.
It's like a car. The more you drive it, the more it needs to go to the mechanic.
Exactly. And GE Aerospace is capitalizing on this, offering top-notch service.
And it's not just about simple repairs. They're doing more complex shop visits,
You got it.
which means higher revenue.
They're leveraging their expertise, those tougher repairs, and that's more revenue per shop visit.
So it's not just about quantity, it's about the value.
Exactly. And they're seeing strong growth in their spare part sales, too.
Which makes sense. As engines age, they need parts.
And GE Aerospace is managing that spare parts inventory so they can meet that demand, being prepared, having the right parts in the right place at the right time.
And we can't forget about those price increases.
Oh, yeah.
They've been able to raise prices in their services business.
They're actively managing their pricing strategy to maintain that profitability.
Okay, let's talk about their equipment revenue. They face some headwinds, but still managed to achieve a 5% increase.
They're focused on customer mix and pricing, being strategic.
Can you break that down for me?
They're being selective about what engines they sell and to who. They're prioritizing those higher margin engines.
Okay.
And focusing on the customers that are willing to pay a premium for their products and services.
So it's not just about selling as many engines as possible.
It's about selling the right engines to the right customers at the right price.
I see.
A more nuanced approach.
Okay.
And they're proactive in negotiating pricing. They know their worth.
So they're not afraid to walk away from a deal that doesn't make sense.
You got it. They're disciplined, which helps them maintain those healthy profit margins.
Let's talk about their investments in those next-gen technologies.
This is where GE Aerospace shines. They're not just focused on meeting today's demand, they're shaping the future.
Long-term vision.
Exactly. They're pouring resources into R&D to create more efficient, reliable, and sustainable solutions.
And those investments are already starting to pay off, like their XA100 engine, which has completed 4 rounds of testing.
Yeah, the XA100 is a game changer,
It's designed to power those 6th-gen fighter jets.
offering a level of performance and adaptability we've never seen before.
Sounds like something out of a sci-fi movie.
It's pretty futuristic,
Yeah.
and their CFM Rise technology initiative,
Okay, remind me.
they want to develop an engine that's 20% more fuel efficient and has 20% fewer CO2 emissions.
That's huge, especially with the pressure on airlines to reduce their impact.
It's a major step forward for sustainability
Okay,
and shows their commitment to making aviation greener.
they're walking the walk.
Exactly. And their investments in digital tech are impressive too.
Okay.
Their digital backbone tech is being integrated into Bell's future long-range assault aircraft.
That digital backbone is like the brain of the aircraft, enabling all these advanced features.
Precisely. And this gives them a real edge in defining the future of flight.
Okay, so let's talk about their approach to supply chain management. They face some real challenges
But they're tackling them head on.
with flight tech.
Yeah, but it's more than just a system, it's a mindset for the organization.
It's that striving for improvement, right?
Eliminating waste, making things as efficient as possible.
It's not just internal,
Right, they're also using it to strengthen their collaboration with suppliers.
which is crucial.
They're working directly with their suppliers, identifying bottlenecks, streamlining workflows, boosting production.
And are they seeing results?
They've increased material output from key supplier sites by 18% just in Q3.
That's amazing. It shows that the flight deck is really working.
It is. They're refining it all the time to make their supply chain even more resilient.
Okay, let's talk about their commitment to customer satisfaction, because it seems like they're going above and beyond to keep their customers happy.
They understand that their success depends on the success of their customers,
It's all about those relationships.
providing exceptional service.
Right.
And they're doing this in several ways, expanding their service capacity, investing in technologies, and offering a range of options.
Like their partnership with Lufthansa Technik.
Exactly, to set up that dedicated Leap MRO shop in Poland.
Right.
That's going to significantly expand their service capabilities in Europe.
Give their customers faster turnaround times.
Everybody wins.
They do.
And their collaboration with third-party MROs is also noteworthy.
How so?
Well, those MROs handled a record number of Alliam shop visits in Q3.
A record.
It shows their dedication to working together to meet that growing demand.
It's amazing how collaboration can benefit the whole industry.
Makes it more efficient and competitive.
Okay, before we wrap up, Let's look at their financial outlook.
Okay.
So despite all the challenges, they're raising their full-year guidance for 2024.
That's huge.
They expect their operating profit to be between $6.7 and $6.9 billion
Oh, $150 million increase.
at the midpoint.
Yeah.
And their adjusted EPS guidance is also up.
To between $4.20 and $4.35.
They're executing well and delivering on their promises.
And while they haven't given us specific guidance for 2025 yet, they've expressed optimism.
Right.
They see continued strength in their commercial services,
Okay.
and they believe that faster equipment growth is on the horizon, fueled by those LEP and 9X engine deliveries.
And that backlog in their DPT segment?
It gives them a clear runway for future revenue.
So even with all that they're facing, they're well-positioned for the future?
They've got a clear vision, a proven track record, and a dedication to innovation and operational excellence.
They're a leader in the industry.
I'm excited to see what they achieve next.
Me too, but before we get carried away, we should acknowledge that they face risks and uncertainties.
True. No business is immune to risk.
Those supply chain constraints?
Yeah.
It's hard to say when those will ease up, and they could impact their ability to deliver and meet demand.
And those Boeing 777X delays, they could drag on.
Hurt their revenue.
And profitability.
Yeah, and there's always the possibility of those unexpected events.
Like geopolitical instability, another pandemic.
Disrupting the whole industry.
All valid concerns, but remember that GE Aerospace has a long history of navigating through these challenging situations.
They've weathered the storms before.
They've got the experience and the expertise to adapt and overcome.
And they're not passively waiting. They're mitigating those risks.
By diversifying their supply chain.
Strengthening relationships.
And investing in tech that will make them more adaptable.
They're not just hoping for the best. They're shaping their own destiny.
Exactly. That's what makes them so fascinating to follow. Their story is far from over.
And the next chapter promises to be exciting.
It's been fascinating to delve into their world.
It has. We've covered a lot of ground, from financial performance to sustainability.
It's been a journey.
We hope you found it informative, and we encourage you to keep learning and diving deep.
Keep your eyes on the skies.
We'll see you back here soon for another deep dive.
I'm looking forward to it.
So before we move on to part 3, I want to leave our listeners with a thought-provoking question to consider.
So remember that question we left you with about GE Aerospace weathering those storms? Well, the aerospace industry itself is kind of a constant storm. It's incredibly competitive.
Yeah, you've got established giants battling for market share and innovative startups trying to shake things up.
So where does GE Aerospace fit into this? Who are they up against? And what are their secret weapons in this battle for aviation supremacy?
Yeah, who are their rivals?
Well, in the commercial engine market, their main competitor is Pratt & Whitney,
Which is part of...
Raytheon Technologies.
Okay.
They're constantly going head-to-head, competing for those big contracts with airlines and aircraft manufacturers.
So it's like a high-stakes chess match.
It is a fierce rivalry, but it pushes the industry forward.
How so?
Drives innovation, forces everyone to up their game.
So what are GE Aerospace's key strengths? What sets them apart in this arena?
Well, their biggest advantage is that massive installed base of engines, remember? Thousands of engines powering aircraft all over the world.
Exactly. That gives them a huge advantage in the aftermarket because all those engines need maintenance, repairs, overhauls.
We're the MRO business.
It's like having this built-in customer base that keeps coming back for more.
Yeah, and that means a steady stream of revenue.
Right. They've also built a strong reputation for their engines being reliable and fuel efficient.
Which is essential with airlines trying to cut costs and be more environmentally friendly.
Absolutely. And they're not resting on their laurels.
So they're investing in R&D.
Yeah. To make their engines even better, more efficient, more reliable, more sustainable, they know they have to stay ahead.
Not just keeping pace, setting the pace.
Exactly. And don't forget their investments in digital technology.
Like their flight deck system.
Yeah, and their work with digital twin technology.
Can you explain why that stuff is important?
Well, it lets them optimize their operations, collaborate better with suppliers, and give their customers insights into how their engines are performing.
So leveraging data to make smarter decisions. That's right. Okay, so let's shift gears a bit and talk about growth opportunities.
Yeah, where does GE Aerospace see the most potential in the coming years?
Well, one of the biggest trends is the continued growth of air travel.
Especially in emerging markets.
Exactly. As economies grow, more people can afford to fly, and that means more demand for aircraft and engines.
GE Aerospace is well positioned to capitalize on that.
They are. They've got the global reach and the fuel-efficient engines.
Being in the right place at the right time with the right product.
You got it. Another big trend is sustainability,
Yeah, airlines are under pressure to reduce their environmental impact.
and they're looking to engine manufacturers for help.
And GE Aerospace is stepping up with investments in things like the CFM Rise program and alternative fuels.
They're taking sustainability seriously.
It's not just a trend for them.
It's essential for the long-term health of the industry.
And the planet.
Their commitment to sustainability isn't just good for the environment, it's good for business.
Why is that?
More and more airlines are considering sustainability when they buy new engines.
So GE Aerospace is ahead of the curve.
They are. It's a win-win.
Absolutely. Okay, so let's zoom out and look at the bigger picture.
Okay.
Where do you see GE Aerospace heading in the next 5 to 10 years?
I think their future is bright. They have all the right ingredients for success: that installed base of engines, the technological expertise, the commitment to operational excellence.
Yeah.
They're making the right investments to capitalize on those big trends, the growth of air travel, the demand for sustainability.
You're optimistic.
I am. I think they have the right strategy, the right leadership, the right culture to really thrive.
They're built for the long haul,
Yeah,
but we should be realistic.
of course.
GE Aerospace faces challenges just like any other company.
True.
Those supply chain constraints
Right.
could stick around longer than we think.
Impact their ability to deliver.
And the delays with the Boeing 777X program, they could drag on, hurting revenue and profitability.
And then there are those unpredictable events like geopolitical instability or even another pandemic.
Disrupting the whole industry.
All valid concerns.
Yeah.
But GE Aerospace has a long history of navigating these kinds of turbulent times. They've faced challenges before and come out stronger.
They have that experience.
The expertise.
And resilience.
Yeah, they're actively working to mitigate those risks
How so?
by diversifying their supply chain, strengthening customer relationships, investing in those technologies that'll make them more adaptable.
Shaping their own future.
Exact.
Their story is compelling.
It is.
They're not just reacting to events, they're proactively writing the next chapter.
It's exciting to watch.
It is. That brings us to the end of our deep dive into GE Aerospace.
We covered a lot.
Their financials, their strategies, the technology, sustainability.
A real journey.
We hope you found it informative.
Engaging.
Keep exploring, keep learning, and keep diving deep.
Keep your eyes on the skies.
We'll see you back here soon for another deep dive.